Listen up, Steve here. The 4 o'clock bell just rang, and let me tell you, it threw a whole bucket of ice water on the so-called hope trade. We're cutting straight through the noise today. Welcome to the briefing. We're talking market reality and the new Warsh regime.
Look, all week long, the retail crowd has been staring blindly at yesterday's S&P record, just praying the music never stops playing. But the smart money? They were busy. They spent the entire week glued to the yields and watching the energy pits like hawks. You know, the friction, it's finally starting to show up on the tape. That minute-by-minute trading data is telling a story, and you need to pay attention to what the pros are seeing right now. Because they don't trade on hope, guys. They trade on math.
All right, let's look at the Friday close reality. Now, the bulls tried to stage this cute little tech-led ambush this morning. It looked strong out of the gate, sure, but I'm telling you, it was a complete house of cards. Here is the verified, harsh reality of those closing numbers. The S&P 500 closed down over 1%. Brent crude, absolutely boiling over, up 2.26%. Then you look at gold. It hit a massive, literal wall, plunging 3.1% as those bond yields violently reset higher. That crushed non-yielding assets. And Bitcoin is clinging to the 80,000 mark by a thread, just testing support. The data doesn't lie, folks. The friction is absolutely here.
So, the S&P 500 is fading fast. It finished at 7,449.50, and it completely failed to hold that crucial 7,500 psychological level as the afternoon sell-off really intensified. This proves the broader market just couldn't withstand the immense gravity taking over. Sellers stepped up, the bids practically vanished, and the floor just dropped right out.
And here is today's ultimate truth teller. Brent crude boiled over to settle at $108.11. That is a massive jump for a single session. The guys in the energy pits are completely ignoring that constructive stability chatter coming out of Beijing. They are brushing off any hopes of diplomatic calm. They aren't buying the geopolitical fluff for a second. They're betting heavily on an upward spark.
So why is this gravity hitting the market right now? Enter the Warsh era.
We just crossed a massive watershed moment today. Jerome Powell's term ended, and regime change hawk Kevin Warsh is officially heading the Fed. The transition from theory to reality is complete, and the easy money era is dead. And here's the basic math of your new valuation ceiling, 4.54%. The 10-year Treasury hit this mark today, its highest level in nearly a year. Look, I've been warning you about this gravity. Higher bond yields mean corporate borrowing costs go up. That forces corporate valuations, the multiples, to come down. It's just basic, inescapable math. The bond market is already pricing in the pain Warsh vowed to bring, and it's acting like a dead weight on equities.
Now you might be asking, hey Steve, what about retail sales? Yesterday's data showed headline retail sales rising 0.5%. Let me be crystal clear. It is a complete mirage. When you strip out the absolutely surging cost of gasoline, the reality reveals a totally tapped-out consumer. We are in the early stages of a stagflationary spiral, guys, where the average consumer is forced to spend way more just to get a whole lot less. Now we need to pivot from the tape to the physical, unyielding reality happening on the water. I call this the digital toll booth. It's playing out right now in the Strait of Hormuz. Let's outline the severe geopolitical threats on the ground. Tehran has pivoted. They're now threatening to target or tax undersea fiber optic cables running right through the strait. If those cables go dark, the global financial data stream is literally severed. Meanwhile, you've got the power plant ultimatum as Trump loses patience, saying he's not going to wait much longer. And our safety net to cushion this blow? Gone. Over 1 billion barrels of global oil reserves have been burned in just 2 months to artificially suppress prices, leaving us completely exposed.
Going into the weekend, we are looking at two radically different market viewpoints. Let's break down the bull versus the bear reality.
On one side, you have retail hope. They're calling it the Beijing dividend. They're placing bets on some secret weekend deal to magically reopen the strait, clear the minefields, send the S&P rocketing to 7,600, and drop oil back down to $85. Right, but on the other side, you've got the bearish structural threat, the Warsh reality. We're talking rate hike signals to crush inflation, active reports of ship seizures off the UAE right this very hour, and Brent crude potentially rocketing to $150 by next week.
Listen up. This is the Professional Trading Directive, and it's the most important part of today's briefing.
Here are your explicit marching orders for navigating that Sunday open. Ignore the noise and watch your levels. Step 1. Verify and watch the 7,400 level on the S&P. We closed just above it. If the S&P fails to hold 7,400 on the Sunday night open, that irrational melt-up is officially over and the correction is on.
Step 2. Do not chase tech stocks against that 4.54% yield ceiling. When safe bonds pay that much, tech upside is hard capped. Step 3. Follow Berkshire's $397 billion cash strategy. Respect the smart money. They aren't missing the boat. They're earning 5% on treasuries, waiting patiently for this interest rate reality to sink the boats that are over-leveraged. Having cash earning 5% is a weapon, folks, not a weakness.
I want you to write this down and burn it into your brain. Small sizes, tight stops, the ledger doesn't wait for latecomers. Look, this market environment demands strict discipline and absolute risk management. You simply cannot afford to be sloppy out there. Watch your entry prices and manage your risk like your life depends on it. I'm going to leave you with one final, hard question to chew on. Are you trading the illusion of retail hope, or are you disciplined enough to trade the reality of the tape? Evaluate your positioning before Sunday night. This is Steve. The ledger is officially closed.